Hey everyone, and welcome to the Bricks, Bucks, and Bytes podcast, your weekly dive into funding, market, and investor news in architecture, engineering, construction, and supply chain. Before we get started, though, if you're a startup founder or operator responsible for innovation in your company, or you want a deeper, more insightful look into technology in AEC, you won't want to miss our newsletter. From deep dives into particular technologies such as AI, robotics, design, software, and so on. Hot takes from investors betting big in AEC technology and advice on building tech companies, including the stories and takeaways of the most successful AEC technology founders. Head over to www.bricks-bytes.com and sign up today to get this exclusive material straight to your inbox. And now for the episode. Okay, good afternoon, JP.
Good to
You're
see you.
still in Switzerland?
Yeah. We're my wife and I are actually moving closer to downtown Zurich in a couple weeks, so we'll be closer to the lake by the end of the month.
Sweet. Very good. Okay, so it looks like it's just me and you today, as I just explained to you. I think Patrick is suntanning himself somewhere, and I actually don't know that, I'm assuming. And Martin has done a Martin thing and forgot that this slot exists, so
It
shame on
happens.
him.
Patrick deserves some time off too, so we'll let him sun himself.
Okay. All right. So we didn't have too much of a plan. Obviously, typically we dive into some form of news within the world of AEC, real estate, anything kind of close energy, maybe. So we thought that you have been on this podcast a few times now, and perhaps people would like to know a little bit more about you. So what I'm going to do, I'm going to leave, and then you can just talk for 40 minutes.
Yeah, we'll make it a monologue. That sounds good. I'm sure people will love that.
Okay, cool. So JP, yeah, I think it would be cool, very interesting to know perhaps your journey into venture. Like why did you get involved with venture capital? And then we can probably go into Camber Creek and well, in fact, tell us how you got to Camber Creek as well.
Yeah, I mean, I'm gonna use a pretty convoluted saying and just say, hindsight is 2020. My path into venture really didn't follow any rhyme or reason, and I remember looking back on even when I was in college, I think I was pretty far adrift from figuring out what I really wanted to do. And looking back at it, those 4 years in school, I remember looking at my peers, and everyone had picked a path. Seemingly on the first year of college, they wanted to be consultants or they wanted to be investment bankers, and I kind of just wanted to have fun. I knew I was really good at meeting people and connecting dots, but I didn't really have a clear line of sight to what that meant from a professional trajectory. And so I ended up taking a job out of undergrad, principally out of necessity, at an organization called AlphaSites, which is an expert network for people who are unfamiliar. And basically, what expert networks do is they connect dots, they connect people with information, primarily to investors looking to make an investment decision. So I remember one of the most interesting projects I worked on at AlphaSites was with a private equity firm based in San Francisco who was looking to take a guitar store private. And they called me up and they said, "Hey, we need to speak to the current or former CFOs of every competing company that sells guitars in the United States." And it was an interesting mandate because it was my job to go out and find these people, figure out how I could network into their inbox and
Yeah.
set up a call with them. And as much as I didn't enjoy the kind of the day to day of the job, the skill set that I built in that first year out of school was incredibly helpful in what I do now in venture capital. And uh, after AlphaSites, I spent about a 12-month stint at that company, moved into a bit more of a traditional consulting role. And then one day I opened my LinkedIn inbox and I had a message from a recruiter from Macy's, which is, the $25 billion dollar department store in the United States, saying we're kicking off a program at Macy's. It's going to be a team of 4 to 6 people. The intention is to do three things. It's to invest in startups. It's to establish partnerships with high tech startups. And it's to also incubate new business models from within the Macy's ecosystem. And what a lot of people don't realize is Macy's is not only a behemoth in terms of its top line revenue, doing about 20 to $25 billion in any given year, but they also own and operate a ton of real estate. They have about 550, maybe a little bit less, 550 stores, large format department stores in the United States, 54, 55% of which they own. And so when you think about a portfolio of real estate like that, that they effectively operate a little bit like a REIT. And so the platform of taking technology and plugging it into the Macy's ecosystem of real estate was a really compelling project and mandate that I wanted to go after. And I remember I had a call with the gentleman who was leading the organization, a gentleman named Mark Mastronardi, who is now actually the president of Equinox. He became the chief stores officer of Macy's, now has transitioned to be the president of Equinox. And I remember sitting in his office saying, I absolutely have to work for you. That was the first time I met somebody and I said, this is the person I want to work for. And that was my jumping off point into venture. We did a little bit of investing. We did a lot of new business model creation. We did a ton of partnerships with startups. And it was a good kind of 3 month, sorry, I should say 3 year boot camp into what it takes to dip my toes into the water of venture capital, albeit on the corporate side of things.
Mm. You said Equinox. That was the company that you was working for.
So he was when I joined his team at Macy's, he was the executive vice president of new business development. He then became the chief stores officer, and just within the last 6 months, he became the president of Equinox. So after about a 25-year career at Macy's, he jumped over and is now leading all things at Equinox.
So was Macy's investing in startups?
Yeah, we invested in a handful. We invested in a
Why?
company called, well, the intention was, when you have this platform of 520 to 550 stores, I don't know when the last time was you were in a Macy's, but a lot of those stores are fairly depressing to walk into. Maybe with the exception of their big masthead store in Herald Square in New York City, they're not nice, friendly places to experience. And so when I joined the team, the intention was, okay, what is a potential solve to make the shopper experience a little bit more enjoyable, a little bit more novel, and everything sort of pointed to technology. And the mandate of the team was, yes, if we're going to invest in a startup, we're going to do so with the intention of rolling out that startup across the 520, 550 stores that Macy's owned and operated at the time. And the thought was, as such a large organization, Macy's could be a really big growth engine for some of these early stage startups. That was the wide eye, starry eyed view of it when we first got started. I think in reality, the actual operationalization of a corporate venture capital firm within an organization as big as Macy's was a little bit more complicated. And I can get into exactly what that means. But
Mm.
the intention was, let's use tech to revitalize real estate. And Macy's had a lot of it. So,
Got you. That makes sense.
yeah.
What year was this roughly?
Oh boy. This was 2019 to, oh no, sorry, earlier than that, 2016 to 2019.
So did the term prop tech already existed?
It did, yeah. So PropTech
Okay.
was still in its nascent days, and actually, this sort of ties. Maybe I'm jumping ahead a little bit. Ties into where Camber got its origins. Camber Creek got its origins. PropTech was definitely a term when I joined Macy's. It wasn't as quote unquote in vogue as it is
Mm.
now, but it was certainly in the crosshairs of Macy's, and they felt it was a path forward to sort of revitalize their stagnating brand. And it's interesting to look at Macy's now because a lot of what they talk about in the press is projects that we worked on, that early team actually worked on. So they're small format stores. That was our idea. Their
Mm.
social media selling. That was a project that I led. And they're
Mm.
talking about these things 6, 7, 8 years down the line about how these new concepts are helping to revitalize Macy's. And I just look at it with a smile because I remember working with Mark and Amanda and Parinda and team on the earliest days of these ideas, and seeing them sort of
Yeah.
as grown-ups in the market is really, really fulfilling.
Perhaps that's a good lesson for people to say, like, things don't change overnight, and it does take, like, yeah, you plant the seeds and then you don't really realize. I mean, especially within our industry, like AEC, construction, real estate. Yeah, 7 years is like a reasonable timescale to expect any kind of noticeable change, I guess.
Exactly, exactly. And we've all transitioned out of Macy's at this point. I don't think there's anybody left from that initial team, but we've all gone on to different roles within this world of the built environment, largely in innovation functions. And obviously, Mark Mastronardi is now championing all things at Equinox, and I imagine technology is a piece of it. But we all ended up where we needed to be. It was a good first lesson into this world of venture capital.
Interesting. I remember when I was in school in maybe year 8, which I don't know what the American translation to that is, but that age of like 13 to 4, no, 12, 13 to 4, no, it would have been 12 to 13. And like the fashion was these brown bags that Macy's used to have.
Yeah. Oh boy. Yeah. No, it is an iconic brand. If you think about it, it's, they have that big red star. The red star is something that if you're American and you have any relationship to retail or you like to shop, if you put that big red star on your phone screen or you see it printed somewhere, you sort of know it's Macy's. They've done a really good job of building that brand identity. But I think now the next iteration of Macy's is how do we.
Hey, listeners, I want to take a quick break to remind you about the Bricks and Bytes newsletter. If you're interested in learning about the technology shaping the future of construction, you won't want to miss the valuable insights we share each week. To get this exclusive content delivered straight to your inbox, head over to www.bricks-bytes.com and sign up today. Link is in the show notes. Back to the show.
Make that star, come into the 21st century a bit more.
Gen Z.
Yeah.
Quick question for your days at AlphaSites. How do you get like into the circles of CFOs of large guitar companies?
uh, so I have a bunch of answers to that. But I'll say kind of what I say to my peers, my colleagues at Camber Creek. One of my superpowers is running through walls. I have a bit of a chip on my shoulder if I can't get in front of somebody, and I will do my darndest to figure out how I can get in somebody's inbox and convert that into a phone call or an in-person meeting. So a lot of it was just brute force. It's figuring out, how many degrees of separation are you to this person? Can I look at their previous career history and find somebody that they overlapped with, two, three, four companies back? Maybe that person still has their personal email. So it's a lot of creative uh, posturing, positioning, figuring out creative inroads to somebody's inbox. But it's a skill set that you and I use day to day, right? It's a lot about networking. Networking
Mm,
is how we do our diligence as VCs. It's how we get our companies in front of customers, and it's ultimately how we win deals.
like yeah, like outreach to get to people. I think an interesting one would be: have you ever had an outreach from someone, and people typically use this platform? I know it was big a few years ago. Oh, and actually, it's still a big platform now, but they can't. They were like the first people to do this was Lemlist, where they would send out. They would allow you to customize like a picture
Oh,
with
interesting.
like a coffee cup, and it would have like an editable piece of text on the coffee cup, which you could send to your prospect. Say like, "Hey, John, coffee for you."
Oh, interesting.
Maybe you could have done one with a guitar, like a big guitar, like, "Hey, this is
Yeah,
me."
I always laugh because I remember the suite of tools that we had at AlphaSites to just give us a slight competitive advantage to have this person respond to our emails. And there were these tools where it would be essentially like a LinkedIn plugin, and you could create a form message, and you would code in, insert person's name here in brackets, and then, insert sign off here in brackets. And I always laugh when I get connections on LinkedIn or emails that say, hi, insert name here, because I know exactly
Ah,
what those people are using.
yeah, that's awesome. Maybe we will fully go back to that because everyone's just sick of outreach and
Yeah.
yeah and whatnot.
Yeah.
Yeah, interesting. So from Macy's then to Camber Creek, how did this opportunity come around?
Yeah. Well, when the background on the Macy's journey was it takes a certain level of commitment to continue down the path of venture capital in any form, right? Whether it's investing in tech, doing partnerships with startups, or what have you. And so that team was around for about 3 years. Again, we worked on some really really great projects that are still in alive today in different forms. But I remember my boss walking into my office or my cubicle at the time and saying, it looks like we're not going to have great news around Q4 earnings. It's possible we have some leadership changes, and we're not entirely sure what that means for the future of our venture capital team. And so that was sort of day one of gutting the VC function at Macy's, and people started to split off from our group into other parts of the organization. And I remember they put me into the marketing group, and I'm not a marketer. I don't know the first thing about marketing. Maybe I know a little bit, but I felt very out of my elements, and I viewed that as an opportunity to dive headfirst into this thing that was venture capital. I only knew it from the corporate side of things, and therefore I put on my let's run through walls helmet and started networking with other VCs and trying to figure out what does it actually take to be a venture capitalist in this day and age. And really, the journey to Camber Creek was pretty it came full circle because I ultimately used the opportunity to go back and do some additional schooling and got pretty far down the path of a possible job with a generalist VC firm based out in Los Angeles. And ultimately, they wanted me to move to Los Angeles. I wanted to stay in New York. I ended up not taking the offer. And they said, oh, by the way, I know of this firm called Camber Creek that's been growing exceptionally fast and they're hiring. Do you want to meet them? And that was the second time in my career where I met the partners, the leadership at Camber Creek, and I said, I absolutely need to work for these people.
Mm.
And if
Why?
there's one thing, there was a certain energy and a certain determination and a certain candor. I think the candor of our company is exceptional. We all speak very straightforwardly. We're incredibly supportive of each other. But I think there is a clear-eyed mentality to what we do here at Camber Creek, where honest feedback is the best type of feedback, and that translates not only to how we speak to each other as a company, but how do we also speak to our portfolio companies.
Mm.
Um, and so I ended up joining the company actually about 4 years ago. My 4 year anniversary is on May 1st, and I've been here ever since.
Yeah. How did you end up in Europe?
That is a story probably worth its own podcast, but
Does it have to do with Camber Creek?
it does have to do with Camber Creek, but it also
Ah,
has to do with a bit of a personal story. And I won't go too deep
yeah.
down the personal path. But the short story is I met someone, and I remember having a conversation with our managing partner Casey and saying, I really like it here at Camber Creek, but for the foreseeable future, I'm going to try to see this personal journey out every 2 weeks. I'm going to fly to Switzerland every 15 days. And I'm extremely grateful to the leadership at Camber Creek because they said to me basically, as long as your work product doesn't slip up, we trust you.
Mm.
And that's converted itself into an opportunity to be here full time, to lead the outpost here from Switzerland, to get to know the ecosystem of real estate and construction companies in Europe, and to one day hopefully build out a larger part of our organization dedicated to supporting founders in this region or founders from other regions that want to come to Europe. And that's my long term goal. And my partners know that.
Yeah, that's awesome. And they also let you loose on a podcast.
Yeah, exactly.
They must really
They,
like you.
we'll see. Depends on the day. I can give them some gray hairs.
Yeah, I'm sure. All right. So, what's Camber Creek's investment thesis? What are you looking
Yeah.
for, apart from exceptional founders, of course?
Yeah, so maybe a good time just to give you the origin of Camber Creek really quickly. So Camber Creek was actually founded in 2011 by a gentleman named Casey Berman. The For those that know or don't know, the Berman family in Washington D.C., kind of the Bethesda, Maryland area, they are a family office. They have a significant amount of real estate holdings. And in 2011, they started to dabble in the idea of, can technology make the assets that we invest in more valuable? Casey, if you ask Casey this, Casey would tell you, we used to joke at the time that a fax machine was the most high tech thing in the office back in those days. And if you look at the amount of venture capital dollars that were invested into PropTech and ConTech in 2011, it was something like 180, $200 million of VC capital.
By the way, just one quick point on the fax machine.
Yeah,
Still high tech in solicitors in the UK because I just
really.
going through a remortgage, and the lady that I spoke to said that they had to refax something over to the people that provided the offer for the mortgage. I was
Oh,
like,
come
wait,
on.
are you serious?
Come
Like,
on.
I couldn't believe it for a second. But anyway,
No, I wouldn't. I
maybe
don't
we
even
need.
know I would know how to navigate a fax machine in this day and age. I
I've
remember, I think I've faxed two things in my life.
I've never ever faxed one. I think I started my career when like faxing. They had a fax machine at the office,
Yeah.
but I never used it, and I would be scared to touch it. I suppose it's like full circle, right? You know how like our parents or whatever are worried about, are scared about certain technology. Me near a fax machine would be like, holy shit.
Yeah, exactly. An analog calculator.
Yeah. Anyway, we're back to like total invested capital in was
Yeah,
it
no,
construction?
yeah, in prop tech and construction
Prop tech.
tech in 2011, it was about 180, $200 million of VC capital invested in the market those days in that year. Compare that with what happened in 2024. There's something like $15 billion of VC capital poured into our sector. So that is an 82% or 82 times uptick in the roughly 15 years that Camber Creek has been around. So I credit Casey and team with kind of riding that upswing very well, or figuring out the timing of the market quite well. But the thesis that we underwrite against is real estate construction still woefully under digitized. The thing that all founders need in our sector is access to prospective customers. If you don't have that, you don't really have the lifeblood of our industry, and you have
Mm.
in our mind, less of a chance to be successful than if you were provided access to a group of companies that could feasibly become your customers. So what does that actually mean in terms of what Camber Creek does? Every time we raise a venture capital fund, we're raising it from 300 plus of the world's leading real estate and construction companies. So our investors, our LPs, are these groups that are interested in tech, curious about tech, just starting to think about tech, and want to start experimenting with technology in their portfolios. So our goal is let's go out, engage the startup ecosystem. Let's test pieces of technology in the portfolios of our LPs first before we ever invest, and let's collect that feedback as step one in our due diligence, as a piece of our process. If that feedback is strong, we're more likely to invest in the startup. And then what I always say is open the floodgates to the other 300 plus LPs that are invested on our platform, who ultimately become the growth engine for our portfolio companies. And it's a strategy that's worked exceptionally well.
Yeah, that was going to be my question actually. Does this actually de-risk the investment by testing it?
That's what we tell our investors, and we have data points. We have data points that suggest it actually does de-risk the investment.
Mm-hmm,
I'll point to companies in our portfolio like Flex, for example, or even Twin Knowledge, which we talked about a few weeks ago. But
mm-hmm,
when we invested in Flex, I believe it was in 2018, was our first investment. They were doing something in the hundreds of thousands of ARR. Shortly after our investment, we put them in touch with owners and operators of more than 1 million apartments in the United States. They're now doing 9 figures in ARR, and not all of that comes from our introductions, of course, but access to 1 million apartment units, owners and operators of those units, that's invaluable for a startup's growth path,
yeah,
right?
100%.
So that's a company that we point to as an exceptional example of our strategy working out very well, and Flex continues to perform stupendously.
Yeah. Do you ever find, because the LPs are real estate investors primarily, th does this like play along the lines of a kind of strategic investment? And do the LPs ever end up investing direct to the portfolio companies of Camber Creek? Or is that, I don't know, maybe that's not like a legal thing in venture. I'm not, maybe you can educate me.
Yeah, we've had instances where we have LPs invested in our funds that have also been interested in co-investing alongside us directly in a deal. That has happened. It does happen occasionally. It's not the norm, but we are not unfamiliar with that model. I like the way you use the word strategic. In a way, being an LP in Camber Creek is strategic because we're obviously here to make our investors money. That's goal number one. But goal number two is I point back to what I said earlier. There's 82 times as much VC money put into PropTech and ConTech last year as there was when we were founded in 2011. Think about how many more companies that now means in our ecosystem. And
Mm,
there's just too many out there for a group, a real estate or a construction company to meet every single one of them. And so how we position ourselves to our LPs very frequently is think of us like your outsourced R&D department that's also going to make you money because we have the ability to talk to all 20 companies in the generative design space, all 50 companies in the security deposit alternative space. We can formulate an opinion. We have access to not only their teams because we meet them and we diligence their companies, but we are able to create an opinion on which companies we believe are going to be here for the long haul. And that piece, the companies that are going to be around for the long haul, is ultimately the most important thing because what we see as the greatest damage to the real estate and construction industries is if companies choose to partner with a startup and that startup is no longer around in 12 to 24 months and that construction or real estate group has poured blood, sweat, and tears to integrating, standing up a team, understanding the technology, and all of a sudden they have to rip it out. That's time and dollars and cents that you can't quantify, but it's painful.
mm, mm-hmm.
And so our strategy is let's meet every startup out there that we can. Let's formulate an opinion. Uh, Candidly, I'll say it doesn't allow us to move that quickly all the time when we invest. And Patrick jokes all the time. He says, getting an investment from Camber Creek is exceptionally hard. It is because we want to run our process and we want to understand if the industry actually needs the tech that you're building. And if they don't, maybe it's time for that founder to focus on another problem, and it's probably not right for us to invest in the startup in the first place. So
Yeah, yeah. Okay, yeah, yeah. There's a reason for it, right? Um, you mentioned a good point earlier that I certainly see this within construction industry too, whereby not always, but there's always a strong argument for having like a strategic investor on because they can open access to uh, potential customers for your technology solution. Do you think that if a portfolio company that play in the real estate field do not get investment from someone like Camber Creek, they can still make it? Well, obviously the answer is they can still make it work, but like it's in your opinion, like, how much harder is it? Is it even possible to answer this question? I don't know, but do you have any opinion on that?
yeah, you're holding my feet to the fire with this one, and I'm curious who's actually going to listen to the podcast. I mean, you're right. It's possible to succeed without an investment from Camber Creek. That's obvious. If you ask me to bet on one entity versus the field, I'm always going to take the field. That said, we have some great examples of working with generalist VC funds who have either led rounds and asked us to participate, or we've led the round and asked the generalists to participate because we just provide very different value adds. Our value add is we can help you with BD. Our network can help you with product development. Our network can help you with hiring people that know the real estate industry. So we're exceptionally sector specific. Can you succeed without an investment from Camber Creek? Absolutely. But we believe that there are two types of venture capital firms. There are venture capital firms that say they add value and actually add value. We would fall into that bucket. And there are venture capital firms that give you lip service and say they can add value. When they give you their check, they say, see you later. Please come back when you 10x this. So I would say more of the industry falls into that latter bucket.
Hmm.
Ask any of our founders. We are extremely supportive, maybe too much so in some instances. But the nice thing about our partnership with our portfolio companies, everyone knows, all of our founders know we're rowing in the same direction. And our strategy and our funds are set up in such a way to help them succeed.
Okay, fine. How do what is Camber Creeks? We were having a funny discussion before we responded about saying like the importance of media in these days and what it can facilitate for companies. And now I even think the first podcast we've done together, I had a little fun. What's the word? I made fun of you a little bit to say that you're prioritizing what VC. I can't remember exactly what I
I'm a
said, but
full-time podcaster now. Yeah.
yeah, exactly. Yeah. Yeah, what's the secret sauce for early stage deal flow? Is it
Yeah.
media?
It can be. It can be. I actually point to something I learned in school where I received a job interview because I had put out a blog post about a certain topic that a fund was investing in, and they said, "Hey, do you want to come and interview for an internship?"
Hmm.
That said, I do think media does provide a source of deal flow, an additive source of deal flow. I think the way I view it though is deal flow can be had in a number of different channels. The quality of that deal flow varies. And I would say we get a lot of inbound from a variety of groups, industry groups, investment bankers, founders directly on LinkedIn. And candidly, we're inundated. We're a small team of, I think, 9 people on the investment side. We speak to about 2,000 startups a year, and people speaking to 2,000 startups a year, about 200 companies each. Uh, and that's a lot. So media, I think, is a really great tool for sharing an opinion on a certain topic or a certain sector, and a really good way to get founders in that topic and sector aware of your brand. I'll say candidly, Camber Creek is still figuring out what our media brand is. Our general partner Jeff Berman, I think, is exceptionally good at being out there talking about PropTech and ConTech on LinkedIn, getting himself to conferences, speaking. I try to do the same on this side of the pond, but we're figuring it out in terms of how loud do we want to be about these topics, because being loud and having an opinion on topics is a great way to get some fervor and energy directed back towards you in the form of deal flow. But beyond media, I personally I feel very confident in the network that I've established around myself. I look at folks like Patrick from Fundamental. He and I trade deal flow weekly.
Hmm.
And, I trust him. I think he trusts me, although I won't speak for him. And so when he sends me a company or vice versa, there's a bit of an implicit understanding that either one of us is going to spend time on that company. And that goes for a number of other funds in the space that I've built a solid amount of trust with. And it's the same relationship. If I send you something, please take a look, and vice versa.
Mm, mm. Yeah, it works in strange ways. There's like circles of people helping each other out. Um, I guess like part of it is a little bit of a trust exercise, perhaps in the early days. Like, okay, I'm going to share stuff with you. Are you going to share something back? Maybe
Kind
they
of, yeah. It's
don't.
a bit of a dance. Yeah, it's definitely a dance, especially as a junior VC. When you
Yeah.
break into the industry and you're an analyst or an associate or senior associate or call it pre-partner, even principal. Um, it can be complicated because you do have to prove that what you're bringing to the table is value add and it's interesting. And anyone in our industry, you included, Martin included, Patrick included, we see, time is precious, right? And we see a lot of companies, and it doesn't make sense for us to spend time on companies that we know implicitly that our funds or our companies are not going to invest in. And so as a
Mm,
junior VC, it becomes even more important to get in front of good deals, good people, a strong network, so that you have multiple facets from which you can add value to other VCs, to industry, to folks like you. That's crucially important.
mm. How important do you think? This is a bit of a strange question, but how important do you think like a personal brand of a junior VC or someone within a VC firm is? Because whilst yes, you're employed and you're representing a venture capital firm, but I like people make a name. I guess this happens in every industry to some extent. Like if you are the best salesperson in an industry, you're going to be known about it, right? And likewise, so is there like a emphasis on building a personal brand or like making a name for yourself? Perhaps is the more correct term here within the VC world.
Yeah, I think so. So I remember 4 or 5 years ago, I don't remember the name of the website, but there was a pretty basic website out there where founders could rate their experiences with
I know
VCs.
VC Guide.
Is that what it is?
I
Okay.
think it's VC Guide here.
Yeah, and I remember catching it in its earliest days, and then you could sort by score across a variety of factors. And I remember going to the ones that the VCs that were rated, if you call it on a scale of 1 to 10, that were rated ones. And it's kind of the Glassdoor effect, right? Like people that are posting on Glassdoor are those that are probably the most annoyed with their experience with their
Mm,
employer.
mm.
But it does have repercussions for your personal brand. If someone were to get a hold of that content and see, oh, person, VCX, never followed up with me, ghosted me after the first call, was very unprofessional in sharing a pass note, it will absolutely affect your personal brand. But like that's kind of the table stakes personal brand, right? It's like conducting yourself professionally. What you can do on top of that, I think, is only additive. So things like bricks and bytes, right? This is additive to your personal brand. Or writing about a topic on a blog or for TechCrunch or thesis driven, additive to your personal brand. Talking about LinkedIn, additive to your personal brand. But those things that are above the table stakes requirement of just conducting yourself professionally, they're not going to save you if you're not doing the day to day of just keeping your experiences with founders on the up and up. So it's a bit of a crawl, walk, run approach in my mind. Like you got to hold yourself to a certain standard. That's
Mm.
the crawl. Build on top of it with things like this and LinkedIn posts. That's maybe the walk, and then the run is, I don't know. You're seeing VCs publish books, and Chamath is on All In, and like all this
Oh
stuff.
yeah.
That's the run.
Yeah. I mean, and to be honest with you, again, it does apply to any industry, and I'm very bullish on the concept. Like, if you look at anyone that has a strong media brand, you also find not always, but they typically have like a good business alongside that as well. Like just thinking of some of the creators that, all the people that pop up in all these circles, like Chamat, like um, the people on the All In podcast, and other people, perhaps ones that I dive into recently, like Greg Eisenberg,
Exactly.
Sam Parr, the people that play in those circles. They've all had some success, and now they're like their media is their sort of like a um, channel to further and better opportunity. And yeah, I think it's all congruent, so it makes
Yeah.
sense. What out of Camber Creek's, like, what are you guys currently looking at? How much of it, and how much perhaps is it construction focused versus more real estate? Because when we spoke about Twin Knowledge, that was very much more construction focused, but targeting real estate owners, so there was a nice
Exactly.
overlap for you guys to come in. But like generally speaking, is there a clear black and white picture?
Yeah, I wouldn't say there's a mandate. We're an opportunistic fund at the end of the day, so we will look at both prop tech and con tech equally. Historically, I think our portfolio split is something like 70% prop tech, 30% con tech. But you know this about me. I think the construction tech side of things is a little bit more interesting than the prop tech side of things. So I spend a lot of time in construction just because I find the digitization of that sector to be, I would call it 5 to 7 years behind where real estate tech adoption was last year. But I think very quickly construction tech might leapfrog prop tech here in the next year.
Mm.
So no direct mandate on prop tech versus context. So we talked about Twin Knowledge. We're partnered with a company called Bridget, which is workforce intelligence for general contractors and specialty trade. They're just expanding into Europe as we speak, which has been a really fun exercise for me and helping them get in front of prospective customers. But we look at anything. At the end of the day, what it comes down to is, can our network be helpful? And again, I'm gonna hit this one over and over and over again, because if our network can be helpful, we're gonna go to bat for our founders. We're gonna make a lot of intros, and hopefully that's the growth engine behind your success. And all of that just comes down to one simple fact: is does your technology fill a pain point or alleviate a pain point in the industry? And do other groups in our network feel that pain as well? So opportunistic, but I personally prefer the context side of things whenever I can.
Yeah, fair enough. Good. With that, are you looking at solutions that are more targeted towards the owners and the real estate people within construction tech?
Yeah, well, so there's an interesting dynamic going on right now where, call it 24, 36 months ago, that's a bit of a finger in the air estimate, but
Mm-hmm.
there was a very clear delineation between technology that was meant for the owner and technology that was meant for the GC. And what we've started to see more and more is pure content companies, or companies that we thought of as pure content companies, have started to sell upstream because there is a clear need from the ownership groups and the developers to have the same level of visibility as to what's going on the site as the GC also needs. And so, there is a bit of a stereotype in the US that, and I don't think this actually plays out in Europe as much, but general contractors, subcontractors, they take a while to adopt. They're typically pretty price sensitive. And when you put those two things together, it becomes a very hard sell. If you're spending 6 to 12 months trying to win X general contractor, and they're only going to pay you $20,000 a year, you have to figure out what the right formula is for how much time you should be spending on that opportunity versus looking elsewhere. And so what we've seen over the last couple of years is developers want these insights as well. Owners want these insights as well. And those are the groups that have a lot of money, that aren't as margin constrained as general contractors, that aren't, fighting for every 10, 20, 30 bips every year, that are willing to pay. And it's a really good phenomenon when companies like Twin Knowledge are able to sell to the ownership groups, but also benefit the contractor, because you're providing a uniform layer of intelligence where every group is speaking the same language. And I
Mm-hmm.
think it's hugely important in this day and age where we're talking about AI every single second of the day, to have that connectivity across the stakeholders in our value chain, because if they don't have it, that's where things go wrong. And that's where things like the $65 billion worth of rework that occurred in 2024 happen. So we're moving in the right direction. I think the indication is that contact can be, or starting to be, as valuable in the field as it is in the boardroom with the ownership groups.
Yeah, I agree. I think that we spoke to a few people recently, and I've certainly noticed a trend of people targeting, or people that have built great products typically say go upstream,
Right.
like go as far as you can. And ultimately, we spoke to Built Technologies on here, and they built a unicorn within the construction tech space, and they went in as far as the financiers, because ultimately
Yeah,
they're controlling like what's
exactly.
happening below
Go
them.
to where the money is.
Yeah, exactly. Follow the money. Yeah, yeah. Interesting take. Um, like what's the fund size? And like what number? Where are you at?
Yeah, we have a family of 7 funds. We the most recent fund was 325 million. We manage about a billion, maybe just a hair north of a billion, across all of our vehicles, and we're typically investing flexibly seed to Series D. So what I typically say to founders is we can write checks as low as 1 million and as high as 40. that, depending on the stage, allows us to lead in most cases. But as you get into those later stages, we're typically following checks.
What's been your number one investment to date?
Oh boy, that's
You
like
don't have to
asking me who
answer.
my favorite kid is.
Yeah, I know.
I mean, the most recent one is Twin Knowledge. We've already talked about that one, but I have the pleasure of working with a number of great companies in our portfolio. Curbio, which is also kind of in the ConTech ecosystem. Curbio is pre-sale renovation for homeowners. Bridget, I'm involved with, as I mentioned, which is great. And then Serhance, which is Ryan Serhant's company based in New York City, I'm also involved with. So I play in a variety of different stages, a variety of different verticals within the built environment, and it's a good flavor of what our portfolio is able to accomplish.
Okay, maybe we will wrap up. One last question. Maybe your biggest misconception. What's like a hot take, perhaps, or a misconception people have generally about venture that you would like to debunk?
Yeah, I don't know. I don't know if this is going to be a novel misconception, but it does. I don't want to say hurt me, but it does resonate when I see LinkedIn posts about large, broad brushstroke statements that venture capitalists are, sharks in suits. And look, I give that feedback some credence. There are bad experiences that people have. I've had poor experiences with VCs, and I think everybody has had poor experiences with VCs. But um, as much as we do diligence on startups, I encourage founders to do diligence on us, because it's not that everybody in venture capital is out for blood. We obviously want to make money, but founders also want to make money. Like, they're in it to make money. There should be a reciprocal amount of diligence done on both parties. And maybe the other thing too, this is the hot take that I'll share with you, is I'm not actually convinced that PropTech and ConTech are right for venture capital money right now. I don't
That's a good
think the
one.
industry is mature enough from a tech adoption standpoint where founders need to be taking money from venture capitalists. I like to see things at like seed strapping, hitting the market, raise one round, get to profitability, and then grow from there. That's promising to me. I think that model is actually more conducive to the tech adoption life cycles in real estate and construction. But historically, what I think is 1 in 4 real estate and construction companies spend less than 1% of their revenue on digitization initiatives. That's ridiculous, and it's indicative of one side of the industry is not ready for tech adoption. I think VCs have to be clear-eyed about, is our money actually right for founders in this sector? And I would argue it's probably not right just yet.
Yes.
It's moving in that direction.
Yeah, that's a good one. I like that a lot. All right, JP. Okay, so from next week we should have the full career back. But thanks for sharing your journey and a little bit about Camber Creek. I'm sure we'll learn some more as we move on. But
Look forward to it.
cool.
Good to see you.
All right, yeah, let's go. See you soon.